Hello everyone, this is Dan Gramza, and welcome to Gramza Market Studies for Tuesday, December 29th. Yesterday's action, I think, is right on target. They are smaller ranges. It does imply loss of momentum if you look at the NASDAQ market here, but I still think that everything's behaving as it should. And from my perspective, I'm looking for a positive week this week. We are looking for an update across the board in these currents and these indices. You know, what we're looking at is optimism. That's the way I think this is a barometer of right now. You know, retail sales are up, consumer confidence we expect to be strong. There's industrial production is up domestically as well as internationally. So there are signs that things are starting to move along. As I mentioned, you know, back in March, for those of you who were with me back in March, or if you'd like to go back to those videos from that period, you can see the comments that were being made. What we were looking for early in this move was resilience. And we still need to see that. And that means a market that backs off on bearish news but continues. It absorbs it and it continues on. That's the kind of behavior we've seen. And I think we're looking now at the possibility of our economy getting stronger. As I mentioned previously, you know, on these videos and also in interviews I've done, that I felt that the end of December, first quarter next year are going to be critical. That's where we want to see our economy begin to catch up. And I think we're starting to see the glimmer of that type of behavior. So, barring any unbelievable bearish news right now, I guess fundamentally looking for an up day and an up week here in these indices. But what about the currencies? Is it the same kind of action there? Do we expect the dollar to continue stronger? Well, in the euro, it's struggling down here. You know, if the euro is supposed to be getting stronger and the US dollar getting weaker, we're not finding buyers following through. The same thing for the Swissy. You know, we're not seeing any kind of consistent strengthening in that market, even though as it moves up, like here, it moved up, reaches a magnitude objective, and at that point the stop comes up to that green line. It's a scratch if it comes back to it. Now, for those of you who have questions about that, please review the intro video to the website. That'll give you some ideas of what I'm talking about. If you want more detail on that, you may want to consider the foundation course. There's an outline there. It gives you an overview of the techniques that I'm using to create these green lines and red lines that you see here, and then also some information on the management, trade management, and how that works. Well, you can look at the outline. You can decide if it's appropriate for you in terms of what you'd like to find out about. Japanese yen continues to struggle. We're expecting that to continue in that respect. You know, you see this sideways move here, and that's a market waiting for an excuse to, and it hasn't had it. Australian dollars, as we discussed yesterday, did move through that buy point, and it continues. We're looking for a strengthening in that market. This is getting near a very key level, so we're going to have to be careful how it behaves over the next 10 to 20 points, or I should say around 88.50. That's going to be a big deal, I think, for that market. British pound is getting ready to knock on the door here to the upside. We're looking for follow through today in that market. And the Canadian dollar also gave us that follow through, but it's at a critical level here right now. So how it behaves today, actually not only today but also tomorrow, can set the tone for the next couple weeks in that market. We'll talk more about that depending on how it unfolds. Now let's take a look at the interest rate markets. The euro dollar continues, you know, it got softer and softer up here. We did back off some. We're still inside the benchmark candle. I think that we could start, you know, moving back and forth either way. Today is going to kind of set the tone. How it behaves around 99.60 is going to be important for us. But in the notes, well, we are getting low enough to see a transitional type pattern. And if this market wants to move back up, we want to be on that side. But right now, if you and I had a short position on at this level, we'd want to maintain that. Same thing for the bonds. We're looking for continued weakness in that market, but we have to be cautious and we have to be respectful of the type of price behavior that we're seeing here. Now, let's move on and take a look at those metals. In gold, we're seeing a little bit of a slowdown in that market. I think the bias is really for another push back up. I know this is also a transitional type pattern, but depending on what we see happening with the dollar, that's really going to determine, I think, what's going to be happening here with gold and also silver. Silver came very close to this buy point here as well. It's already a long position, but it came down to 1735 is the buy point. It came within a few ticks of that in yesterday's action. And what we're looking for is follow through to the upside. Copper, I think we have to be cautious about. Again, this is a part of the optimism that we're seeing here. Copper is a barometer of that optimism. 400 pounds of copper in every new home, and we're expecting that consumption to go up if our economy is doing better. And when it comes to the energy markets, we're seeing crude oil continuing its climb, and we expect that to continue. There's a few things going on with that. We're expecting some cold weather right now in the northeast. The northeast part of our country is where the heating oil is used. In the rest of the country, we basically use natural gas. But remember, the primary consumer of natural gas are industrial uses, chemical plants, steel mills, general industry, and also in power production. So those are about both the same. They're about close to 70% of the use of that product. But we're seeing some positive prices. Now it's going to be important in natural gas to see that kind of follow through here. In crude oil also, I should mention what's fueling that some of that move there is also what's happening in Iran. There's a number of protests, and unfortunately some people are losing their lives, which is very sad. But Iran they're the second largest OPEC producer. Saudi Arabia is number one. Most of the Iranian oil goes to Japan and China. So we're seeing some of that uncertainty kind of also filtering into what we're seeing here in crude oil. But as our economy becomes optimistic, as people perceive our economy getting healthy, we're going to see probably some more pressure here on crude oil, higher crude oil prices. And when it comes to the grains, well, we saw buyers coming in across the board in beans, corn. We finally got some follow through in that market that I think is respectable. Today is going to make or break corn. If it comes back down here, we're expecting a down move going into year end. Same thing for beans. How it behaves in this area between 10:30 and 10:40 today is going to be important. Wheat, well, we finally found some buyers there. That was the sell point that was established earlier to that. That was at 567. This is 580. 567 was that sell point there, and the buy point was at 533. That difference between that red line and that green line would be $1,700 is the dollar value of that move. And right now, this is now the new stop and reverse point at 535. Well, I hope this gave you a few ideas to think about. I'm looking forward to being with you again tomorrow. And in the meantime, take care.